Semiconductor stocks are absolutely crushing it today, and we're talking double-digit moves on some heavy hitters. The question is, are we looking at the start of a real tech bounce, or is this just a one-day wonder? Let's find out what it means for your portfolio. Let's start with the indices. All right, so the Nasdaq took a step back today, down 0.46%. Not huge, but definitely not what you want to see. Now, here's the thing. We're also down 2.55% for the week, so there's been some real pressure building. But before you panic, the semiconductor stocks we're about to talk about are telling a very different story. They're surging while the broader index is struggling, which tells me there's some real rotation happening underneath the surface. The Dow, though, totally different vibe. Up 0.14% today and up 0.83% for the week. So we've got this interesting divergence where the Dow is holding up, but the Nasdaq is sliding. That's actually a shift toward what traders call risk-off, meaning big tech is losing favor while old-school industrial and value stocks are getting some love. Classic rotation. And honestly, that matches what we're seeing in some of today's biggest movers. Now here are the top movers of the day. KLA Corporation is absolutely on fire. 258.80, up 7.62% today, and up 8.41% for the week. This is a semiconductor equipment play, and they're benefiting from real demand for chip manufacturing equipment. The Fed's been talking about inflation, but that's actually driving semiconductor companies to invest in efficiency. And that means equipment makers like KLA get the call first. LRCX Technologies is right there with KLA. 401.82, up 7.21% today, up 7.39% for the week. Another semiconductor equipment giant. You're seeing the same trend. Chip makers are gearing up, and these suppliers are the ones directly benefiting. This is the play that's working when everything else is stuttering. Caterpillar popped 6.29% to 1,057.01, and it's up 10.58% for the week. This is huge because Caterpillar is an old-school industrial play. You're seeing both semiconductor equipment and heavy machinery rallying, which tells me there's real capital expenditure happening across the board. Companies are spending, not retreating. That's a positive signal, even if the broader market is skeptical. Apple, though, Apple's not having a great day. Down 6.12% to 275.15, and down 7.03% for the week. This is the flip side of the rotation we talked about. Big tech is getting hit, and there's probably some concern about iPhone demand and margin pressure. When semiconductors are surging but Apple's struggling, it usually means there's worry about consumer spending. That's worth paying attention to. TJX Company's down 6.04% to 155.19, down 5.45% for the week. This is a retail play, consumer discretionary. And this fits the pattern. We're seeing weakness in consumer-facing businesses while industrial and semiconductor equipment companies are surging. That's telling you there's caution on consumer health, even though the headline data looks okay. Now, let us look at energy and fuel. Oil popped up 1.66% today to 71.51, which is solid. But look at the week, we're down 6.88%. So yeah, the trend is still south. We're talking supply concerns easing up a bit, maybe some demand worries creeping in from global slowdown chatter. Nothing earth-shattering, just the normal back and forth you see when the macro picture is uncertain. Natural gas is having a better week than oil, up 1.55% today to 3.27, and up 4.14% for the week. Summer's kicking in, so we're seeing some cooling demand kick in for air conditioning. But supplies are tight enough that even with seasonal headwinds, the gas market is still holding its ground. That's actually pretty bullish if you're looking at energy plays. Moving on to metals. Gold's doing what gold does when people get nervous. Up 1.35% today to 4,044, but down 7.22% for the week. So gold had a rough week overall, but it's staging a little comeback today. That tells me there's some flight to safety demand kicking in, which makes sense given some of the Fed commentary we heard today about inflation still being too high. Investors are hedging. Classic defensive move. Silver's a different story. down 0.29% today, and yikes, down 18.13% for the week. That's brutal. Silver diverged hard from gold, which usually means industrial demand is getting crushed. When you see silver fall that hard while gold only dropped 7%, you're looking at weakness in manufacturing, tech, and solar. Not a great signal for growth sectors. And finally, let us look at tomorrow. Tomorrow is Friday, and there's a note that we might see non-farm payrolls data, depending on the calendar. That's huge for market sentiment. If jobs are strong, you'll probably see more pressure on big tech because the Fed stays hawkish. If jobs are weak, you might see a flight back to safety and possibly some rotation out of these industrial plays. The Chicago Fed's Goolsbee said today that inflation is still too high, and that's keeping pressure on everything. Watch the employment number tomorrow. It could be a game changer. For now, keep an eye on whether this chip rally has real legs or if it's just a one-day bounce. The rotation is real, but it's also fragile. Stay sharp. For your daily market update video, don't forget to hit that subscribe button and turn on the notification.